Hello, Oracles. Well, CPI data came in yesterday, and it came in higher than expected. And just as we had discussed, if it came in higher than expected, we were going to get exactly what we got, which was a massive sell-off in the market. We were kind of teased for a little bit initially with the market rallying, but then the bottom fell out, again, as we had expected. So today we have the PPI coming out. That is the Producer Price Index. So this is going to be another indicator of inflation. So if those numbers also come in high, brace yourselves for some more pain. So this pain may be continued going forward. Just looking at the charts and where we are at and where we are going, I go back a couple of months and someone in the comments had mentioned that we were on a massive dead cat bounce. And a dead cat bounce is when the stocks come down and they bounce like this as if they're bouncing down a stair. And so looking at this, the SPY and the QQQ have made lower lows than we had at the end of February. Tesla's not there yet, but with today, we might get there. The lowest that we had was February 24th when we hit $700. So if we close below $700, that is not going to be a good sign. Depending on how you look at it, honestly, because if you are somebody who has a lot of cash on the sidelines, waiting to buy in Tesla at a lower price, this will be a good thing. For those of you who are holding through this, again, I feel very strongly. Even Elon said himself, he sees a very extremely strong future for Tesla. So if you're bought in at a higher price, just diamond hand. Hold yourself. If you can buy in to lower your dollar cost average, do that. Otherwise, just wait it out and you'll be fine in the long term. Now, when I say long term, normally, historically, the stock market does not turn around in situations like this until the Fed stops raising rates. So as of right now, based upon inflation being so high, the Fed may have to jump in and do an emergency meeting before the next FOMC meeting to raise interest rates before then. Not sure if that's going to happen or not. We do have this next CPI coming out in June before the next FOMC meeting. If that comes in high, and looking at gas prices and oil prices now going up again, if that comes in high, we might get a 100 basis point hike in June and freak the market out. And I think that's kind of why we're getting a massive sell-off now, is because we came in higher than expected on CPI, we have the market thinking worst case scenarios again. Now don't forget, the market always does an overreaction, but inflation realistically is still high. We have discussed this in the past. You know, the market may be manipulated up and down. We may think that we're rallying, but the true fundamentals of the economy right now, inflation is super high. Yes, we came down a little tick from last month, but it's really not a lot. We still have Russia-Ukraine at war. We still have supply chain issues. There's still reality of a lot of issues going on around the world. And then we have the inflation still being high. And one of the little pieces that I get from all of this is I pay attention to the headlines that are written out there. Now think back, when we have the CPI data coming out and the headlines are reading, inflation is the highest in 40 years. And now the headlines I saw for the CPI yesterday were, inflation is softening. I'm like, seriously? Like, it came down 0.2%. It's softening? Like, a month ago, you guys were just screaming how high inflation was, and now you're saying it's softening? So this is how the media just manipulates all of the people who don't actually pay attention to what's going on, because it makes me wonder if, this is a sign that we are actually out of control, and the media is trying to reel inflation back in. So I don't know. And again, this is another piece of uncertainty. And again, when we have uncertainty, the market doesn't like that. So just paying attention to how the headlines are written tells me that there's a lot of manipulation going on in different areas. And so going over to Tesla and thinking about how low we can possibly go, I had mentioned it in last night's quick video. William Reed had mentioned that he feels that we're going to come down to $200 to $300 in Tesla. Now, if that's going to happen or not, I don't know. Technically, somebody had done some research, I can't remember who it was, and I apologize, saying that there is a gap that we have actually going all the way down into the 200s. So I don't know how old that is. It's over a year old. So that's really far away. So whether we can actually get down there or not to match what William is saying for his predictions? I don't know. 600 seems to be a number that is getting thrown out a lot recently. But again, going back to this dead cat bounce, if we do get down to $600, that's not a good sign because that is a lower low. So after that, we would have to hope that the next time we come down after a bounce, we have a low that is higher than $600. These are just the things that I follow in the charts for technical analysis to let us know kind of where we're headed. So again, if the SPY and the QQQ have made lower lows, that gives us the indication that the market is still coming down. Tesla may very well follow that pattern. So this is something I'm watching. Now, I do have a lot of cash on the sidelines, so I'm one who is ready, and if we come down, I'm not going to be disappointed. I want to lower my cost basis on Tesla, so I'm totally good with that. Again, if we are going to be trading sideways for 12 to 18 months, or even down a little bit more, that just gives us a ton more time to add shares. Remember, this is the time where quantity of shares is going to be the most important thing. So the more shares you have, the better. Think about if you had like a stack of $100 bills. If the value of those $100 bills was coming down, you wouldn't actually lose that $100 unless you like burned the bills themselves. Then you have totally lost them. But if the value of those $100 bills came back to $100, you would then recoup your money. Same is going to be holding true for your stocks. If you're holding Tesla at a higher dollar amount and it keeps coming down, you haven't lost any money until you actually sell. Sure, the value of that stock has come down, but the value of that stock could and will most likely will come back up and exceed what you have paid for it. You just have to wait. This is where patience is going to pay off for you in the long run. Just be patient. Of course, there is the strategy where if you think that we are going to go down to that $600 or even the $200 or $300 mark, maybe you sell now and then buy in down then. That is not a gamble that I'm willing to take. This is why I dollar cost average. I may not be able to catch the bottom, but I will be able to lower my cost basis so that when we do recover, I will have a higher quantity of stocks for that value to be appreciative on even more. And now, similar to where we were back in February, where the entire market was basically at an RSI in the low to mid 30s and many were under 30. Under 30 is oversold. So we are heading there. We are very close to the low 30s right now in most stocks. So with this being the case, we may come down for the next couple of days, push into that oversold range, and then have a little bit of a recovery next week. But again, that might be the next little bounce up from our dead cat bounce. Just things to pay attention to when you're trading. If we do get that bounce back up, I will be looking at taking advantage of that opportunity to potentially sell out of some of my other stocks so that I can free up cash for the next time we come down. And so how long will we be coming down or trading sideways for? Again, I think it's going to be for as long as the Fed is going to be raising interest rates. But don't forget we have midterm elections coming up. And a lot of times during midterm elections, magical things happen where who knows, maybe inflation is going to come down, because at that point we are going to be in the heart of when inflation was pushing super high last year. So we may just get those year-over-year numbers showing a lot lower, and with the Fed raising interest rates faster now, we might actually get month-over-month numbers being better around September. And then magically it goes away, and then everybody's surprised, and then we see a rally going into the end of the year. Again, this is just my current thoughts. I don't know what's going to happen, but we have seen the most random things happen in the market to swing it one way or another. So this is on the table as a possibility for me. And then of course, which stocks do you invest in as we go down? Those are going to be the stocks that have the best cash flow generation coming in, the ones that are the most profitable and have high demand for their products. Tesla obviously is one of the, if not the top play that is out there in this category. And so one of the things that I was talking to, actually TT had mentioned it in the comments yesterday, which is we talk about how Tesla is so great at overcoming the supply chain issues that we have had and just, so much better than everybody else. But they have also overcome the labor shortages better than anybody else. The latest labor numbers that we had that came out were there were one person for every 1.9 jobs that were open. That is a significant labor shortage. But because Tesla is the most sought after company to work for engineers, other than SpaceX, and Tesla has huge cash flow coming in, this means that they have their pick of the talent and they can pay for them. So Tesla has been able to navigate the labor shortage just as well as they have been able to navigate the supply shortages. So thank you, TT, for mentioning that, because that was an awesome point to bring up about going forward into the future. Because I know at my company, we are struggling to find help, and it certainly affects our business because we cannot function properly. More mistakes get made. It costs us more money. We are less efficient. That is a significant problem that many companies are seeing. But because Tesla has the ability to pay and get everybody that they want, they will not have those issues, and in turn will be more efficient and more profitable in the future. And this is why, in my opinion, Tesla is going to be the strongest player coming out of this. This is why I am converting much of my portfolio over to Tesla. Before we started crashing as we are, I was at 40% Tesla. I'm now currently at 61% Tesla. And this is with all the dropping that we have had going on. So when we do recover, Tesla is going to be a significantly larger portion of my portfolio, and I will be super happy about that. Let me know in the comments below, how are you guys holding up with all of this? You know, again, something we had mentioned at the beginning of the year is cash flow generation, and having cash for moments like this are one of the key things that we needed to do. So let me know if you guys were prepared. Let me know what you guys are spending. I know many of you have been sticking to your convictions. Slim, awesome job. You held to your convictions. You had that strong feeling that Tesla was going to come down to these levels, and you bought in accordingly. So awesome job to all of you guys who have done that. Let me know what you guys have for your plans for buying into Tesla and any other stocks, and let me know how you've been doing with them so far. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.